We are live. Welcome everyone to the episode 6 of the Futurum Equities podcast. You got myself, Shy Balor, aka Stock Savage Shy. We got the legend Dano Newman. You guys don't know this. I hung out with him for the past week, last week in person. He is fully an enterprise celebrity. So, guys, we're in the presence of greatness. But
You
Dano,
can't
how are you
tell the
doing?
secrets though. You can't talk about the halls we walked and the people we met. The selfies we took. When I'm with you, Shy, I get like a little like social envy. I'm like, this guy's the man. Anything he tweets is like. But I don't know how many times you get stopped when you're inside the halls of antiquated old tech companies to take selfies with people.
Not many.
It doesn't happen to you yet. Don't worry. Your time is coming, my friend. Your time is coming.
Not at all, but hopefully that's my nirvana, so we'll see if I get there. But yeah, let's tackle last week's. Again, you guys, we usually come on Friday. This is our Monday show. Why is that? Listen, Dano and I were on TV over 10 times last week. We were covering a lot of the tech earnings, and rightfully so. It was a lot of movement, but I kind of want to go over the first one, which was Google. I think Google was also the most impressive one, where clearly the cloud business is hitting an inflecting point. But wanted to give your take real quick on what your takeaway was from the Google earnings report, and are you surprised to see such minimal reaction on the upside after what I believed was a home run of an earnings report?
Well, so they had 10 straight days up heading into earnings. So we all know there's the sort of buy the news, sell the news, this was buy the expectation. It ran up 10 days in a row, but really just kind of nicely appreciated into what I would say is not even quite a fair valuation. You look at it versus its peers. You look at it versus, say, a Microsoft, and Microsoft's executing perfectly. We'll talk about Microsoft later, but Google has full stack infrastructure. Google has, deep research roots in AI. It has autonomy. It has models. It has chips. It has everything. And then on top of that, it has this money printing search business that it is now able to take all this AI investment that it's made and layer on top of search, layer it on top of YouTube, layer it, into its cloud business, into workspace. Oh, and by the way, it has this incredible data estate that it's built over all of these years. And it trades at the lowest forward multiple of all the companies in the Mag 7. So I'm frankly just perplexed at how we all adore the full stack. We're like, we wake up, live and breathe. NVIDIA's full stack. Tesla's full stack. NVIDIA trades fairly. Tesla trades ridiculously. And Alphabet is undervalued. And so I came away thinking great execution, still, in my opinion, undervalued. And I don't care about the regulatory risk. I don't think it's that significant.
Well, I also want to highlight how difficult it is to have all four quadrants of the requirements of being an AI leader in the new digital economy. You mentioned it: data, distribution, the hardware, next gen brain. Google has all of them. And I do think that the difficulty of creating your own hardware is now coming to light a bit, where you see Maya have multiple reiterations from Microsoft. You're seeing Meta aim to do so. I think it was 2027. They're trying to do so to accelerate it. But Google, their TPUs are multiple generations ahead of their competitors, excluding Trainium. But for TPUs alone, sixth generation they're on right now, and it just shows how important model quality is once you build on top of your own chips, because there just is a level of visibility that's required to increase your model quality if you have your own chips. That's why everyone wants to be that own their vertical integration, because they know what's working, what's the bottlenecks, and they improve on it. And Gemini is slowly but surely becoming the connectivity layer of everyone's workday. Google owns everyone's workday. Fine. Search might get removed, not removed, might have a competitor. I think they're going to evolve, but let's just say, fine, competition is going to actually keep up. Guess what? You're not going to lose. You're not going to leave Gmail. You're not going to leave Google Calendar, Google Meets. Google has so many other product suites that they can pull the lever on, that once they can go from I don't know, price per click on the ad business to price per tokenization. They become a full-on utility player. So I think this was a really strong report. But I also want to pick your brain. Like, why does model quality matter so much on building your own chips? And if that was the case, why did Microsoft and Meta kind of take a back seat on their approach on we need our own chips ASAP?
Well, let's be very clear. Neither took a backseat on that. Both are trying. Chip development is very hard. And so you really got to think about control. You love the control layer. Well, think about controlling your own destiny. So everybody has access to the same silicon when it comes to merchant. So you want to train on CUDA software using NVIDIA, or you want to train on AMD software using ROCm. It's like a very level playing field. But when you can customize and tune a chip, so you think about why you develop an ASIC to do something very specific, a specific chip to do a specific workload. So you want to basically train the model and tune the model and then execute the model on a vertically integrated stack, vertically completely integrated network. There's a reason Jensen's building it this way. It is the most efficient, most optimized, most powerful way to do it. But his infrastructure is available to everyone. So what's the unique differentiation? Well, Google can obviously develop and train and then tune and then optimize for performance very specific to the workloads that Google wants to deliver. This is why I often say like custom AI chips will probably be largely utilized for internal because software. The software requirements are too heavy. You've seen how hard it's been for AMD to build ROCm and make it competitive to CUDA. You've seen that Intel hasn't been able to do it at all. You've heard that like AWS has not been able to really use Trainium for external customers. They're using it for their own stuff. That's something Amazon's very good at. Same thing with Google. Google's training its own models and then delivering its own inference on entirely its own infrastructure. That is differentiated. That's what Tesla's trying to do. Tesla's not training, but Tesla's trying to deliver the entire rest of its experience from an inference standpoint. And then, of course, a lot of people think that Tesla will eventually try to go the route of having its own full stack infrastructure. But I actually think Tesla and NVIDIA are pretty closely tied at the hip.
Well, why do you think Tesla went the Samsung route? I don't know if you saw that news line yesterday or last night.
Well, that's fab. I mean, that's just foundry of its inference chips. There's a lot of different reasons it could have gone that route. I mean, one is price. TSMC is so demand is so high. Their inelasticity of their price is pretty much unmatched. Samsung has had a harder go. They've had a hard time with yields and volumes and performance on their chips. Maybe Musk felt that he could help and obviously maybe get some pricing advantage by working with Samsung, which has had a pretty hard time in the sub 5 nanometer era.
Mm-hmm. Yeah, I mean, I'm shocked that it was a 3 nanometer is what like Elon's willing to risk the biscuit with Samsung. But like you said, this is not a demand issue for TSM. Like they have too much demand. So in order for Elon to fulfill his vision, he kind of needs to go to alternative route, and that is Samsung. And they've struggled with their yield recently. Maybe there's a catch-up story there. Either way, I do actually want.
Think of it this way, though, really quickly. Just think of it this way. Tesla's not a big, important customer at TSMC. At Samsung, it can be the most important customer. You just think about like where you're ranked in an order. You got to get into the queue. You got to get access to wafers. You got to get access to resources. Tesla's volume compared to an NVIDIA or an Apple or a Qualcomm is not that big.
Yeah, true.
So it's a great deal for Samsung, and they'll probably pour a ton of resources into it to make sure that it works as well as possible. But again, that's risk. That's the same reason a lot of companies aren't like they stick with TSMC, even though that risk, the cost might be higher. The risk of getting it wrong is so big, and Musk is just a bigger risk taker. He's taking the risk, taking the chance, and if they can get it right, he's going to get a pretty good advantage economically out of it.
How much of a tailwind would this be for ASML if Samsung succeeds in this venture with Tesla? Now there's actually a second choice now outside of TSM. So, because I think that for ASML, like if Intel can figure out 14A, if Samsung can actually accelerate this second fiddle, the demand for ASML is going to pick back up because they're kind of chained a little to TSM's like supply and demand issue. Do you see like a avenue for them to catch like a renaissance of like, whoa, there's gonna be more demand now for their EUV tools?
Well, think think of it as there's a total volume of demand and then a total number of chips that need to be output. So the high NA machines from Intel or the advanced lithography for TSMC, then you think of every facility that's being built. I mean, Samsung has a certain amount of need. So if they have an increase meaningful of chips developed, they might need more machinery. But in the end, it's interesting because these companies don't actually create more demand, Sean. So like the total number of machines could only vary by a few. Remember, these are machines that are $400 million type of single machines to do, to manufacture these chips. It may or may not actually change, but what would happen is just who buys them changes. So if it's share shift, the total number of machines may not actually need to change that much. It may be a machine here and a machine there. So it could certainly incrementally improve ASML's business. But the real question is how much total demand is there? And then how many chips can these machines output? And then basically divided by how many chips need to be created to meet the market need. And of course, ASML can't just ramp these like, oh, I need 3 more machines tomorrow. Like these things have to be very, very well planned out based on demand patterns. But of course, if Samsung, Intel, TSMC are all competing, you have some type of market expansion, the Jevons paradox thing that as pricing comes down, demand goes up. It could certainly lead to more demand for ASML. But I think right now it's no pun intended, semi-fixed because the bottom line is there's only so many chips need to be made. Each of the foundries have a certain amount of capital equipment they need to purchase to manufacture what they're committed to.
Yeah. I actually want to make a pivot to the next most impressive report from last week. ServiceNow. I think they're
enterprise, huh? We're gonna go
we're gonna straight enterprise. We're going from last week's recap so we can go right into the upcoming week. And I think that ServiceNow is actually one of the few software names that are monetizing AI, and they proved that last week. And we spent time with their management team last week, and I'll let you answer on how your interpretation is of that report and what your conversation with like management and how the future is going to look for ServiceNow.
So we're in this inflection, right? There's these like 3 layers in which agentic AI will be implemented. And let's just be very clear. Agentic AI is application. So for people out there that are like, well, where do agents fit in? Agents become applications. Applications become deprecated to basically just databases. And the logic used to be a SaaS platform. I think I've made you more bearish on this the more you've heard me talk about this, right? The SaaS platform was the logic. It sat on top of the data. The agents now are the conductors. They can basically orchestrate across many different applications, many different data sets, on premises, in the cloud, on the applications, anywhere. And so now what you have is which layer are you going to procure your agents from? You're going to procure your agents from a SaaS platform. So say your Workday, your Salesforce, even like Mondays and Asanas, all these are SaaS platforms. You can put an agent, and those agents basically add a layer of capabilities on top of your existing SaaS and data and logic. The alternative is you can also get this from infrastructure companies. Google has an agentic platform. Microsoft has an agentic platform. AWS has agent. And basically you build your agents with your infrastructure, and your agents can work in your infrastructure and work across all your data sets. Those companies have, their strength is they have all the compute, all the networking. They can, where they may have some weaknesses depending company to company is enterprise software. Now, each of these companies are even slightly different there. Where I like ServiceNow is they're sort of like, and this is a bit of an unpopular word, but the way I describe it is like a middleware. So basically, ServiceNow does not have all of the technical debt of, say, like most CRMs and ERPs. They're heavily, customized. They're very difficult to update. Getting reports out of them. You've been in big corporate work before. When you needed to get reports out of systems, you had a whole team just to get your reports. Like you have all this software, but it's actually really hard to get anything. So ServiceNow is sort of building this from scratch to say, if we were the one company that could navigate against all your software estate, all your data estate, all your infrastructure, and you could basically just interact with it like ChatGPT, like Gemini, ask it a question, talk to it, and it could basically go across and orchestrate from all your software, all your data, all your tools, and come back to you and abstract to you a real-time user experience that would show you personally, Shai, what you want to see, would you buy that? And I mean, the answer is, I think so. And this is what ServiceNow and its control tower is trying to do. So is it doing it yet? It's in progress. Are they the company that is most likely to get it done? Not for certain, but I definitely have a lot of confidence in Bill McDermott and his team. But realistically, what they don't have is all that technical debt. People have historically only used it really for a ticketing system. So the fact that they've expanded into HR, they've expanded into CRM, they've expanded into customer success and services, they have the opportunity to sort of go back to all the people that are like, I can't get value out of my enterprise software. They say, that's fine. What if I can give you a chat GPT experience for all of your enterprise software estate? So I like ServiceNow there, and their business is, they're, what I like to say, Shai, they're doing the business. Highest growth rate of all the significant SaaS players right now.
Mm-hmm.
Big RPO and backlog, great strategic partnerships, out delivering on its control tower numbers, and doesn't have all that technical debt. They have a real chance to pivot their business model to something that makes more sense, which has to be consumption based, has to be token based. It can't be seat based.
No, I mean, I think people also forget how sticky ServiceNow is and how many companies use ServiceNow. So many. And fine, there might be some future competition on ServiceNow. I don't think that's I see that FUD narrative. It's not really the case, because sure, you might create a product that's similar-ish, but as a customer, you're not going to find something enticing enough to leave that ecosystem to find their competitor. It's like trying to redo the plumbing of a skyscraper. It's going to take forever. And is it worth the pain? Do you want to use your resources to do that in this AI race? Probably not. So I think that right now, if you had to think about large cap growth tech, ServiceNow is one of the first to actually monetize AI. And it looks like there was a phrase that was used constantly, the gloves are off. I think it's truly they're going for the world right now as that control tower for enterprise AI. And even though I get a lot of messages like, oh, why they fade the move post earnings reaction? Like, guys, it ran up into the print. It's pricey. But if a stock actually ends up green after the print this earnings cycle, it proves it was an impressive earnings. The majority of them have been very red on great prints. The last one I want to talk to before we move on is...
Can I just say one thing? Mm-hmm. The market needs to appreciate that the real competition for a well-executed ServiceNow is actually going to be the LLM companies that are all coming after enterprise workloads, and it's going to be the cloud providers. I actually think they are getting close to being an N of one against SaaS. Salesforce is a little bit of a unique story. I do think Salesforce has so much inundated customer, such a large customer, but I actually think it's the cloud providers, and I think it's the LLM companies that are going to attack what's fundamentally broken about this software industrial complex.
So what's interesting though is you're not that off. Like, I think Perplexity is probably the biggest fear of that, and you're seeing them as Perplexity at 150 billion valuation. Like, they're actually neck to neck to ServiceNow, which I think is like 200-ish. I think that you're seeing that fear that LLMs are having in the search business, in the software business. Like, being a middleware is kind of a scary place to be if you're in software. And like Daniel mentioned earlier, ever since I started working closely with Futurum, I've gotten more and more bearish in the software space. I'm like, oh my God, it could get replicated. And I know, like, back in the cloud days, which you probably can speak on more for sure than me, there was always that fear. Like, the big cloud service providers will always just overtake the Snowflakes, the CrowdStrikes, etc. And that was not the case. I do think AI is a little different, where it could possibly be replacing a lot of these middleware companies. That's that. One last thing I want to talk about last week, because I do think we got to hang out with some great leaders last week, and I'm learning a lot more about the company than I did before. That is IBM. What was your takeaway after last week's earnings report, and where is their place in the kind of the new digital economy?
Interestingly enough, IBM and Watson X and its agent platform has a lot of similar attributes to ServiceNow. But what I really like about IBM is more of its role playing this conductor their consulting business, while it isn't growing all that much, it's actually growing its AI work really quickly. And the consulting business at IBM navigates between SAP, Oracle, Salesforce, ServiceNow, Workday. They do implementations of all this stuff. So while what actually I think is most lucrative long-term for a company like IBM is, of course, its own software, and of course, Red Hat and Watson and automation software scaling up very quickly. But someone has to implement all this stuff. And there's such a massive difference between standing up AI for consumers, where you're just scraping the open internet. People are giving their data, taking their data, sharing whatever. It's all just kind of out there. By the way, remember some rulings were made about legal precedent in ChatGPT. You can expect no privacy in what you do in ChatGPT. But the net of it is that we basically have found ourselves in a situation where we're going to need really capable companies to get AI to work in the business. 99% of enterprise data has not touched AI yet. That was Arvind Krishna at IBM told me this. And whether it's 95 or 99, and whether 10 or 20% of data is still relevant, most data still hasn't touched AI in the enterprise. Enterprises have to deal with compliance. You saw the AI summit with President Trump last week, like deregulating and moving energy as fast as you can and building out data centers as quick as you can. But there's still requisites for like privacy, compliance, sovereignty, data, integrity, security. All those things that companies are up against are really complicated. So I like IBM a lot as the company that can kind of go into these big enterprises and deploy it. I also think they have some very good technology with, for instance, Red Hat for hybrid cloud, Z mainframe for transactions. Still like 90% of all transactions and 70%, I think, of all credit cards hit a IBM mainframe. And by the way, they blew their number out because of infrastructure. Like nobody even thinks of IBM as an infrastructure company, but it's a huge part of their business. So they've hit all-time highs. I keep saying what's old is blue. And in the era of transition to enterprise AI, there's a lot of decomplexifying that needs to be done. I think IBM is one of the companies that can get that done.
Yeah, I mean, what stood out to me the most was that moat they have in transactions and through their mainframe. That is huge. And that's why they're experiencing a renaissance, because whenever there's whenever you have a moat like that and there's a super cycle, you're going to be in the middle of that, because those companies will not leave IBM's mainframe to do whatever alternative solution there is. They're just not going to. So that's why we're not even touching on the quantum angle on IBM, but we'll talk about that another time. Let's talk about that. Was backwards looking. That's what happened last week. Let's talk about this upcoming week, because it's a doozy. I think let's talk away from tech a little right now. Let's go back. We'll get back to Azure. We'll get back to
we talk about SoFi. We talk about SoFi.
Exactly. You read my mind. Let's talk about SoFi and Robinhood. And I think, Daniel, this is probably the most excited you've been on a SoFi earnings report in quite a while. Tell us about how you're feeling and what your expectations are before tomorrow morning.
So I've spent 4 years accumulating a really sizable position, as shy as you know, in SoFi. I'm a real bull. Like I have a large enough position that I think some people could retire off of the right reaction to earnings tomorrow. And so I'm nervous. I mean, look, I have been through I'll say two things. I sleep like a baby owning the company. I believe in the company, but I'm nervous about I feel like we're entering no man's land here. And why? Because the stock has acted completely differently going into earnings than it has over the last 5 or 6, maybe even more earnings. It's historically had a really nice run, 5, 6, 7 days, where it runs really nicely into earnings. And then it beats on all levels. It'll even raise and then it dumps. That's been the action. So we had this great run up about 2 weeks ago. Like it just exploded from like $10 to like $21, $22. And everyone thought it was going like parabolic. I mean, you and I even said, like, where's it going next? Price discovery, 28, 29. This has definitely become an earnings play. Like this thing stopped in its tracks. It stopped dead in its tracks. And it's been in this consolidation mode now. It's been down 6 of 7 days, but not a lot. I mean, it's still hanging around like $21. So it got to like 22.10. And with like 6 down days out of 7, it only went down like $1. So it's not losing a lot. Like there's clearly a lot on pretty low volume. There's a lot of buyers. A lot of people are buying this and basically looking at every dip. So basically the question is, how big of a beat does it need to have for it to sort of meet, because this is totally one of those could be sell the news. Like it ran up a lot. People have made money. Some people that were in this thing a long time might just be ready to take the money and run. But just remember, Anthony Noto has a $300 million payday in 2026 if he can get this thing to 45. And about 75% of that payday requires him to get it to 45. He's got some hits at 25 and 35, but the vast majority of the 300, like 240 million of it, is him getting this thing to like $45. And so I think he's going to do it. And again, he's done this with no loan deals, no crypto announcements, no options announced. Like, I just feel like they have these things that they could roll out that could just absolutely break this thing free. And I just wonder, is this more conservative Anthony Noto, not going to do anything? Or can we get a little Vlad the Showman here? Because I see a lot of opportunity for this thing to do a Robinhood-like run if it's managed correctly.
Well, crypto's not even crypto's got announced last month for SoFi, and that's going to be probably some of the narrative on the earnings call.
They kind of announced it, but they really haven't talked about it. Like it kind of like it's like the product showed up, but like they did not do like a big bang on that at all.
Weird. So, it's such a SoFi thing to do, by the way. Like that's the opposite of what Robinhood does for marketing. But like that's a huge lever they should pull, especially in this time when like Bitcoin clearly wants to go higher. So much love for Ethereum. You're seeing like Tom Lee's out there. It's something that I feel like maybe tomorrow might be the upward surprise on that. I also would love to hear some commentary on Galileo. That was a whole spiel a couple years ago. The AWS of the fintech space. We haven't really heard much about. I haven't heard much about that in recent time.
I just keep hearing there's a lot of banks working with it. It's like basically going to be this platform that all the banks are going to use. But again, we're waiting to hear about Galileo deals. That's just another thing. It's the loan platform deals. It's Galileo. Like they've really announced nothing in this run up. I mean, there's been some indirect. They had that Bitcoin transfer where they basically allow you to transfer money. They kind of announced entering the crypto space again, but no splash at all about it. They did the access to some private investments where you could get access to some deals. But like I said, I tweeted something that basically said, we need the Alex Karp burn the shorts to the fucking ground kind of moment right now out of Noto. He needs to do something or say something on this earnings, raise a big raise or like a big beat. Like they're saying like, I think 6 cents a share earnings, like come in with like 12. I mean, something that just absolutely sends shockwaves and blows the shorts out. Because we've seen short interest fall by like 2%, but like there's still a lot of short interest in this stock. And you're not going to get the kind of squeeze you would get with like a GameStop or like because the float's too big and there's too much liquidity in the stock. But like there is this thing, I think you would agree. I think this could run to 25, 26 on a killer print. I think you could see a 12 to 15% day. I think the IV on it's like 10. So I think everybody's expecting fireworks in some way on this earnings print tomorrow.
Yeah, I mean, the characteristic has always been sell the fade on an earnings report. We'll see if that's different for SoFi. Let's talk Robinhood, because Robinhood is also your second earnings play.
I'm that guy, by the way. I'm like the guy that owns them both. Like
I know.
Always
you're
Mr.
Fintech.
You can own Nvidia and you can own AMD. You can own Robinhood and you can own SoFi. Like, I mean, I do like concentration, but why not be concentrated in both?
Yeah, let them fight it out. You'll be the winner either way. How's your thought process different for Robinhood and their earnings than it is for SoFi?
More volatility, less concern. What I mean by that, like it could drop $10, but it could recapture that in like 2 days. Like some of these names, you just have so much confidence in their ability and the retail market and just the excitement and enthusiasm about them. Like Hims is another example of that. Like where, it drops like $10 on some news, a bunch of institutions getting out on news, and all that does is it just gets gobbled up by retail. If for some reason Robinhood disappoints and sees like a $10, $20, I just feel like retail will just come in and absolutely gobble that up, and it'll come back really, really quickly. I just don't have that history with SoFi. I've seen it go up and come down and stay down, and so I've got scars like everywhere on my body from this thing, despite the performance. But like I mean, I got in Robinhood. Most of my position I accumulated in like the $30 to $40 range. It's at 105 today or whatever. I don't care. Like, I'm gonna hold this. Like as my uncle teases me, he's like a trader. He always looks at charts and tells me when I should buy and when I should sell. And I always send him notes like, yeah, I'll probably sell that. Dot dot dot. Never. Like, like I have no intention of selling any of this stuff. I'm just gonna buy more, accumulate.
Yeah, I mean, even if it goes down 10%, you still tripled your money at $90. So you got luxury of that little cushion. But all right, that's fintech.
What
Let's
about
talk.
you? What about you? What's your thoughts? I mean, come on, Shy. You don't get out of Robinhood. By the way, do you own Robinhood?
No.
Let's talk about that real quickly.
I added on my watch list at 20. I ignored you at 35, and now I'm watching it above 100. Just holding.
What'd you do with Hims, by the way, when I told you to buy that one?
I sat on my hands even more. It's just
how's that one done since I told you to buy it?
15% cash position right now too. It's not like I didn't have cash. I was a thematic investor. I overthought it. And classic example that I'm definitely learning from. But geez.
By the way, shout out to Viking. Dump that data, Viking. Dump that data. Let's see it.
It's any day now, right? There's no. It's August.
Yeah, that's all GLP-1 right there, folks. Danny Dimes and the GLP-1s.
No, but Viking is a great example of just like, God, it's not an earnings story, guys. Like it dipped on higher than expected cash burn. Like, no, this is not the story. It's a binary play on a data readout that's, I think, going to lean bullish. If you look at what the management's done recently, what the option change is implying, like it's going to be an explosive move. And Dano and I are both in it, so we are. It's kind of like our fun way of like,
because like for everyone out there, there's some names because we advise a lot of the tech industry that I have too much knowledge to actually buy and sell, and so I can opine about them, but I have to sat on the sidelines, can't own them. These are the ones like you hear me talking passion, like SoFi, Hood, Hims. Like I own these things big time, and these are the ones that I'm playing and trading. Last week, I wrote 25-20 put spreads on Viking last week for January. So that's that you basically buy at 25, sell at 20 the spreads, and I got like $1.70 a share. Mm-hmm. So basically, I did like 50 contracts or something on that last week. Got really nice put option premiums there, but like. I've been playing that all week. Did we talk about the Oscar trade I did on the show yet? The 13-11.
Yeah, I'm just saying like the bottom of that too.
13-11 made $1 a share on that trade, and it's only out to October. I mean, if it goes below 11, I mean, I'll take my lumps. But God, what a good trade. There's some Viking has ridiculous premiums. The average street target on things like $90.
It's crazy. I think. It's crazy because it might be $100, it might be 20. It's going to be a volatile one for sure.
But they have a lot of cash, and I mean the one thing is a lot of these pharma companies are like literally operating on the edges of broke. Like they need a buyout. This one's unique. They don't need a buyout. They have almost $1 billion of cash, and they have a contract manufacturer. They can make this themselves. I mean, my idea to you, right? We didn't go public with it. Was I want Hims to buy it. I know it would be more of a merger, but God, could you imagine Hims with the best oral GLP medicine, and it's completely proprietary to Hims. Pills,
it would be a major pivot, but
nobody wants to shoot it. I don't think they'll do it, but I mean, wouldn't that be that? Like, Andrew, get it done. Get it done. I'm telling you. Then Nova would have nothing on you, although I don't think they have anything on you anyway.
All right, let's pivot back towards tech because we got to talk Azure numbers. I think they're reporting before Meta, but Microsoft's an interesting name because they had I think 3 straight quarterly disappointments on Azure. Last quarter was, reacceleration. I think right now we've had some drama again on their model wars that they have with OpenAI. I saw your tweet that you're hearing whispers of 35% growth in Azure. What are you expecting on their report?
Yeah, so I tweeted out that the whisper is about 35%, which my take is anything higher than Google is great. Like that's what Microsoft's the standard it's being held to right now. Is Google is the fierce challenger. Google Cloud, it's done an amazing job. It's winning big customers, winning big deals, and it's become very reputed in AI for all the reasons I mentioned. The stack, right, Chai? But like Microsoft, So where's my indigestion? Because I love Microsoft, the execution, cash machine, diversification. I called it out years ago, said it would be a killer AI play, but I still think it has over dependence on OpenAI, too much dependence, doesn't have its own models, too much dependence on NVIDIA, doesn't have its own chips and infrastructure. It's going that route, but hasn't gone that route. But it has the best commercialized AI in the enterprise with Copilot. So they've gotten some right, they've gotten some wrong, but if full stack is the prize, it certainly isn't there yet. But if they can basically grow faster than Google, who cares? I mean, I take all of like my comments off the table because it's like, look, if you're doing it without it, you're not spending all that money, not all that R&D, you're not tying up all that into model development, and you can just execute and get all the enterprises to upgrade from Office 365 and M365 to Azure AI services and Foundry and build your models with an open model architecture, and good on you. So, like I've been in circles about this one because I kind of want Microsoft to do more, but like if the whisper number is true, and I would say I would not be surprised if it was. I would not be surprised to see it in the 30s. And if it's outclipping Microsoft, if it's outclipping Alphabet, that's what I would consider getting the job done. That's the key competition right now, because you can be absolutely certain that growth rate is going to be probably almost twice, if not more, than AWS.
Yeah, I mean, AWS is massive, but yeah, it has to be 32% top line in order to beat Google.
Well, remember, if they grow, I mean, they're nearing 75 million now, like 75 million in Azure revenue, and it's like 160 million in Microsoft Cloud. So Microsoft, because Google's about 50. So you're just kind of like keeping those numbers in your head. I think AWS is like in that 130 range, but like every quarter that they're growing at this clip, it'll only be another like 3 years, and Microsoft would be
crazy. Bigger. I always think of AWS as the king of compute, but like you said, it's becoming more and more uneven. Question though for you, I'm curious, who do you think has a better distribution mode between Azure and Microsoft and Google via enterprise versus their Workday products that Google has?
Microsoft, by a lot.
Really?
By the way, we're a Google shop. Microsoft owns the big enterprises. Like very few large Fortune legacy healthcare and financial services are on Google Workspace for email and for core, for PowerPoint and different things. They're not using Google. I mean, I like it, but like I think large enterprises are often on Microsoft. Microsoft also has the biggest security business. You and I have pointed that out in the Cyber 7 as security platform becomes more inundated with infrastructure, which becomes more inundated with software. That's a potential advantage. Of course, Google's chasing the Wiz deal. That'll help change its complexion on the whole stack there. But I just think it's provenance shy. I mean, Microsoft's just been the enterprise software provider forever. And remember, Microsoft also has a pretty healthy SaaS business that it's converting with Dynamics and 365. So it's got business applications as well. So it's got Power Platform, it's got business applications, it's got enterprise productivity suite, it's got devices. It's got Surface. It has, of course, the cloud business. They're just so diversified. Like it's hard not to like it. I just wish they would do better on their chips, and I wish they would do that. I guess maybe not do better, but just what is the model strategy? Because it can't just be OpenAI, because clearly that's fractured. Clearly that.
I think have the urgency that Zuck has right now. Essentially, it's just saying on creating your own model, own chip. But let's go to Meta, because I think Meta is actually the one priced for a potential disappointment in my eyes because of the AI spend spree. I think it's going to really hurt the bottom line, and I think you're going to probably anticipate a guidance on the lower end on earnings due to that margin contraction that they are experiencing right now from this AI investments. Are you hearing anything different on maybe Meta won't have that kind of headwind? Or
which AI investments are you talking about first?
Super intelligence. All the
because like the people it's amortized, right? Like the people are getting stock. It's probably got a vesting shelf. They're probably not writing checks like, hey, here's 100 million, come to work on Monday. It's probably some sort of stock rewards. You got to balance that against the float, the buybacks, the sort of, overall shares issued, and how they're actually planning to handle those in terms of, like I said, the vesting schedules. because my guess is those will probably vest over a few years. So that's going to be, if you think about it, 100 million, for instance, in the grand scheme of Meta is nothing. So you got what, about 20 of those people, a couple billion.
I think the worry is like if they're spending on this, what else are they spending as well?
Well, that's the second part, right? The CapEx number. But the CapEx number, which is mega, and they're of course talking about, they're not just mega, but they're also giga. They're mega spending on gigawatts, right? They're spending mega on gigawatts, and they're building data centers for their own use, unlike other companies. And you and I have had this like conversation, like should they open it up and become a public cloud and let other people consume? But Meta is a hyperscaler for its own use. It has MTIA. It's building its own chips. It's spending big. I mean, where has it pissed the most money away? It's been on the
visual rat,
VR, the metaverse stuff. I mean, the AI stuff. The reason I really like about it, the reason I really like the superintelligence race is that they actually have they're like Google, but with less regulatory risk. I mean, the ads business is extremely profitable, very sticky, high margin, and it's implementing and utilizing all the AI it's building. So it has a reason to build all this AI for something right now. They actually can monetize everything they're doing right now for consumers at scale. And then, of course, they're expanding, whether it's open source projects with Llama and building the best competitive models, which clearly it needed to invest big in the researchers because it had hit the wall. It had absolutely, Llama had hit the wall. They were being passed up. They had an issue with Behemoth. But like I said, it's just hard to go against their growth. They make over almost $6 a share of earnings is expected. And I think the superintelligence bet was a bet on their next trillion or more in market cap by winning the model race and winning the AI research race.
No, I agree. They're going to probably accelerate that. It's a no-brainer in my eyes. I do want to ask you about another name on Thursday, ARM Holding. This is a name that they've recently pivoted towards the data center space. They're no longer just the blueprint of the digital economy. They're actually trying to turn into much more. What's your takeaway on what you expect? I know you talked to Renee at time. What's the expectations for this earnings cycle?
Yeah, we'll talk this week. I'll catch up with Renee. They are a AI adjacent, juggernaut because right now they're winning the vast majority of cloud workloads for the CPU head nodes. That's been a big pivot. You're getting big numbers from ARM and Graviton. You got Microsoft Cobalt. You've got, of course, Google Axion. So all the big cloud providers are building a CPU on ARM now. And then you have every handset device, every PC that's an ARM based now, even, though there's Qualcomm's reporting this week too, but Qualcomm's Snapdragon is an ARM-based design. And so ARM has the low power, ARM has the sort of handsets and devices, ARM now has the data center. What ARM doesn't have is an AI chip yet. And so this is what's really interesting is that there's been a lot of sort of indications, so like a horribly kept secret, I'm kind of joke, but is ARM going to get into the business of AI chips? And this could be the next big leg up for the company. And when it comes out and announces that. So, it's had really steady growth. It's been able to attach itself very effectively to this AI run up, but they're not actually the Grace and Grace Hopper or Grace Blackwell. Well, the Grace is an ARM chip. So that's the CPU. So, they've increased their, their margins quite a bit with their subsystems. With customization, with building chips for others. And they still have kind of leaner royalty revenue on the architecture license that they have out there. But, it's a good, stable business. Which is why we have it ranked highly in our AI 15. It's more AI adjacent than AI direct, but you can't do AI without the CPU. So despite the fact that it's less the volume of it, you still need it. And so ARM has definitely been the leader in this race towards AI and the CPU. But I do think it's the AI chip is their next leg up. Like if they have a meaningful design, but are they competing with Broadcom? Are they competing with Marvell? Are they, what is the exact approach they're going to have? Is it an off the shelf, chip? But right now, like when Google turns to Broadcom, if ARM gets this right, will Google now turn to ARM to design and build an AI chip? And that could change.
What other part of their business will get penalized in a way if they create their own chips? Again, they were like the Switzerland of AI investment before. Now there's a potential competitive headwind if they create their own chips. Am I
Totally.
reading that correctly?
Well, if they even just create the design, they just haven't even, like right now, they haven't been the IP partner for AI chips. Even if you think about just the IP part, like technically speaking, you want to design a custom AI chip, you went to Marvell, you went to Allchip, you went to Broadcom, you went like to MediaTek. But what if ARM would do that for you? Like, is that a possibility? That's the same way you go to ARM for a CPU.
Interesting.
That could change the dynamics.
Yeah, I hear you on that. I forgot to talk about Amazon. I'm super curious on what your expectation. I know we briefly talked about how AWS is like a lot of large. Their competitors are catching up a bit on their total top line dollar. I think Amazon has been kind of penalized the past couple quarters due to their e-commerce margins being disappointments via consumer recession, via tariffs. What is your read through on their report on, I think it's on Thursday?
Yeah, Amazon's doing all the right things. They've made big moves. They're expecting a mid double-digit growth in operating income. They're working closely on margins. The robotics is a windfall as it continues to take OpEx out, and it's able to add robotics in. Had some strong Prime Day results. All of Bezos is selling isn't super bullish, but I mean, the guy has all these hundreds of billions. I guess he wants to put a few in the bank, do other things with it. I don't know. I think they're not as closely correlated to just a pure cloud number, but we do have to remember that cloud is all their income. So all the income of the business is mostly generated through cloud. Also, their advertising business, now more than $40 billion.
Crazy.
Huge. Another number to watch, and it's fully integrated now, the advertising on platform to sell on the e-commerce. So I like a lot of what's going on there. I do think it's, going to get some, they have to accelerate growth. If Google's accelerating growth in cloud, Microsoft's accelerating growth in cloud, Oracle has had an incredible growth in cloud. There is some, consternation about, is Amazon falling behind in this AI era? And we think they're doing a lot of good work there, but the growth, and again, some of it's law of large numbers, but some of it is, it's consistently growing at somewhere around half the pace of the other clouds. At what point does that start to become something to contend with? And I do think it got off to a bit of a slow AI start when it came out with its cloud offerings. And I think it's made a lot of headroom in catching up, but it does take time for that reputation to follow. Similar to what we'll probably say when we talk about Apple.
I was just going to say, let's talk about one
you
of
got
the worst
nothing on Amazon? What about you?
Listen, Amazon, I think it's going to be stuck for a long time. It's the Bezos wall of selling. I think that they're kind of stuck a bit on the retail side of their business. I think AWS continues to exceed expectations, but at a slower pace. Like you said, Google and Azure I think that I wish they owned their own model. I don't think they have any plans on really owning their own model. I think they're comfortable with their Anthropic relationship. I think that puts a lower ceiling on everything that we talk about, having the vertical integration in-house. I think for them, their retail monopoly is such a monopoly that it allows them to be enablers for a lot of these super cycle growth themes. And I think they just don't feel the urgency, I guess, to kind of create all these in-house solutions. But for you and I, we talk about this all the time. Like you need it. You're seeing all these competitors do that. And I know they have Trainium, but I just think that Anthropic, maybe they acquire them eventually, maybe not. But it's something I wish they would do. And maybe that would cause the reacceleration in AWS. I don't know. I think AWS is growing in the teens, high teens now.
It's vacillated around 15 to 18%, I believe.
So the market's outgrowing AWS. That's the concern, and that is a real concern, especially when if you get too comfortable with your lead. Everyone knows AWS is king. It's not just like they're
17, 19, 19, 19 over the last 4. So
the market's outgrowing them by a decent amount.
The other clouds are growing 10 to 15% faster, and Oracle has been even faster than that. One thing to call out, though, is Amazon has the Anthropic relationship, but it has been very committed to model development. So it's got its Nova series of models, which are text models, multimodal models, Nova Micro, Nova Lite, Nova Pro, Nova Premiere. Don't get a lot of credit for it. They got an image generator called Nova Canvas. They got a movie generator called Nova Reel.
I didn't even know that.
But yeah, you said like you probably haven't heard anything about it, but
No.
yeah. And then they do have their Bedrock, which is the AWS platform, and they have
I know that. Yeah.
Titan, which is Titan is its family of models for foundation models for Bedrock. So they actually have the full stack story. It's just has not resonated in the same way as it perhaps has with Alphabet. Or
why not? Because Bedrock's huge. I'm shocked that like they don't just leverage Bedrock to kind of communicate that narrative.
Well, ultimately, I think it comes down to how many things at one time can you get credit for. I just sometimes think that focus. People just don't see, hear, talk about. Like I said, Amazon, I do think has been chasing since kind of the onset its competitive posture in the AI race. So that's going. By the way, is AMD reporting this week too?
I don't think they are. I remember we talked about it briefly. I couldn't
AMD
find
and
that.
Qualcomm. Is Qualcomm this week?
Qualcomm is this week. I did not see if AMD was. I couldn't find
I just want to check that out because if
well, I think it's crazy that AMD and Nvidia are the same price today. For I don't know when was the last time that has happened, but they were both at around 174, which is crazy to see. Yeah, I don't see them
next week. AMD's next week.
But I know we're at the top of the hour. I want to touch on Apple before we hop off. It's end on a very negative note. No,
I got a few minutes. So first of all, Apple is a story of a story. Best brand loyalty on the planet, right? High net promoter score, very low defect rate. If people stay on handsets for the long term, Apple will be hard to disrupt, even though I have a bearish tilt on it just because I'm really disappointed in its failures to execute. It's failing on models. It's failing in innovation on products. It's failing on AI in the platform. It's leaning in and depending on other companies to get it done. And of course, it's losing its talent. Its COO is stepping down. Its top researcher went off to Meta. I mean, these are all things that you got to look at and be like, what is going on? Like, when did we hit the period in time where someone was going to leave Apple? The top AI researcher at Apple is going to go work for Meta. The ads company, it's like a story of one company that's pivoted to become what it wants to be. And the other company's kind of like, is it just a hardware play? Are they just hardware and credit cards now? Hardware, credit cards, and TV? I mean, what is Apple going to be? And so, every company that's ever historically been disrupted didn't realize it was going to get disrupted. I love the stories, right? The blockbusters, like Netflix, $50 million. They could have bought it for $50 million. They were like, nah, we don't need it. Kodak's like, we can stick with print a little longer. We don't need digital cameras right away. How'd that work out for you? BlackBerry, no one's ever going to use a touch screen to type out an email. Now, you could argue none of those companies were as big. None of those companies had the moat that Apple had. But at their times, at the heydays of those companies, they were some of the biggest companies in the world. And it's never in the moment that it's happening that you notice. It's when it's happened. And so the question is, one is you got the Joni Ives and Sam Altman's trying to build new platforms and new device architectures and types. You've got Meta saying it's going to be glasses. You got people thinking it might be pendants or pins. It might be something pervasive. It could be a contact lens, a wearable in your ear. Like, we don't know what it's going to be, but as long as there's handsets and that's the main screen, Apple's going to be fine. But having said that, like, at what point does Apple get held accountable that like Samsung's AI is way better than Apple's AI? Android's AI is way better. Like, that's my big beef. But like, overall, their numbers, they're probably going to be, I mean, everything in the number looks fine. They're going to grow like probably around 5%. They're going to have to talk about tariffs. Are they going to be in any trouble if this China thing doesn't work out too well? But I mean, it's a story about a story, Shai, which is like how you tweet. It's a story about a story. It's not the technicals here. This company can keep buying back stock. It can keep lowering the float. It's going to keep printing cash for a number of additional quarters. But the story is negative because the AI execution has been terrible.
Yeah. And you're getting no commentary on the call probably to help that narrative. It's just going to be a services company at the end of the day on Thursday, but it's also pricey, guys. It's not a cheap stock. So interesting premium that the market's assigning them. But that is the hour. We got to hop off. This was an not an ad hoc. It was more of a catch up. Usually we're on Fridays. Hopefully you guys can tell the difference on a Monday episode versus a Friday episode. But we are,
What's the
again,
difference, Chai?
I think the difference is my eyes goes to what the market's seeing right now more because it's more volatile. Usually Friday afternoons are a little dead, but tune in.
You're staring at your money.
Staring at my money going lower.
Hey, before we leave, what's your play? What's your take? Are we frothy if you're in positions right now? Are you telling you saying is this maybe a time to take some cash off the table because or do you think this bull run can last? I mean, where's your head?
I think the bull market will last. I think we're going to have 5 to 7% pullback sometime before the end of the year. I think earnings is going to be a very sobering time. You've seen the reaction already to really strong prints that went red. Netflix, great example. Super strong print, 60 times earnings, pull back 5%. All these names need to catch a breather. Daily RSI is at 75 right now. And some weird black swan event happens every September. I can't describe it. Some weird news story that comes out nobody expected. I think we're getting priced into perfection into that kind of environment. So just be cautious. For me, I've held on way too much cash. I should have listened to Daniel months ago and just bought some specific plays. And so raising my cash, learning lesson. But I will be very aggressive on any kind of earning disconnect on price action versus execution. So I'm ready. I'm prepared. But
at some point, if you wait long enough, you'll be right. There'll be a pullback, and you'll be like, "See, Dan, I had all that cash. Look how wealthy I am right now. Like I have all this cash. I'm ready to deploy."
I'm gonna look like a genius. I
never bought anything. Yeah, it's probably not the best strategy, but
it's not.
But hold on to your hats, folks. I'm gonna probably, tomorrow morning is gonna be a one of those where I'm gonna wake up like my eyes because it's morning report for SoFi, biggest position by a lot. I've got at least a couple of years of retirement tied up in that stock right now. Anthony Noto, do not let me down. I've not preached or jostled you on the socials. I merely share the fact that I think you're executing well, but don't be afraid to get a little carpy out there. Don't be afraid to call out those short sellers. Those, what did he call them? Those crackhead, the cocaine,
cocaine
ingesting short sellers. But we need a little showmanship right now. I mean, I will always take execution over a story, but why not both? Since you could actually do both. Yeah, there's a lot of fun. And by the way, we will be back Friday, like full tilt. And for all you out there, we will be launching this week, next few days on all the podcast channels. So there'll be the Futurum Equities pod. It'll be on Spotify. It'll be on Apple. It'll be on basically anywhere you can get your podcast. It'll be on YouTube. We'll be dumping this over to YouTube. And of course, our favorite place, X. I've got a competition. I want to be more influential on social than Shy by the end of this year. So make it happen, people. Listen to this stuff. Listen to all my nonsense. I may not tweet as well as him, but I got all kinds of crap to feed you.
Well, I think essentially we're past pilot season now. We're essentially full launching this podcast. We're excited. And tune in Friday. We're going to have a recap from all the earnings this week. Thanks for hopping on, everyone.